There's really three key points there. One, you got to be dynamic. You can't always be short volatility. There are times you need to exit that trade or get flat. Number two, you just can't over leverage. Over leverage will inevitably lead to a blow up in a short vol strategy. So there's a lot of vol premium to harvest if you're short there, especially lately. But when you try to lever it up, that's again where blowups happen. And the third is pretty obvious, but don't be naked short. Naked short vol, especially when combined with leverage, is really a recipe for disaster. I wrote in our investor letter last October that there were numerous signs of pre-crisis behavior exhibiting themselves across markets, and we were really just waiting for a catalyst. After 10 years of QE, negative interest rate policy in much of the globe, near zero interest rate policy here, and just 10 years of easing liquidity and really not a commensurate growth with the real economy, and we've now gotten that catalyst with Corona. I think, sadly that it's really too late to contain Corona from really going worldwide and in force. I liken the test results that are being published today as a lagging indicator, and really those results are showing where infections were 2 to 3 weeks ago. Because you've got that 14 and 21 day symptomless incubation period, right? So people who are sick now, they've been exposed, they've been around, they've been spreading this virus, which is airborne, right? And I think when you combine the high likelihood of a pandemic, even if it's not nearly as fatal as something like Ebola, which was one of the most recent vol shocks we've seen, other than the 2018 volpocalypse, really sets up the market to have a lot of vol like we saw last week. We see people fading this Fed announcement today. I mean, 50 basis point rate cut isn't going to keep people buying airline tickets, going on cruises, even going into the office, right? So I think we're going to see major economic disruption. We're seeing it already from Corona, and that's a recipe for both higher volatility and higher volatility of volatility. Short vol, I think, worked really well last year, right? Our dynamic volatility strategy was short almost the entire year last year. Not naked, not over levered, though, and we were up 13% on about 3% average cash usage, right? So it was very effective year for being short vol. Then we made money this year on the long side too. So again, you got to be dynamic with that trade, but for people who have the fortitude to sell vol after some big time spikes here, it could be a very profitable trade. But I think you've got some significant risk in the trade as well. It's my third RMC, and y'all always put on a great show. Winston really appreciates that you're hosting it at a dog-friendly property. But I mean, the content's been great. I mean, the speakers, food and beverage. I mean, I really recommend it both for buy-side firms like ours, as well as investors who could really benefit from learning more about the volatility space. I mean, it's a very important asset class, and y'all do a great job educating people on that. And I think on a look-forward basis, that's going to be really important with what we're going to see in markets this year.